Welcome back to the deep dive. Today we are focusing our analytical lens squarely on one of the biggest players out there, Salesforce.
A big one for sure.
We've been sifting through their Q3 fiscal year 2026 results, all the filings, and it really paints a picture of these massive strategic bets.
And it's all about one thing, really.
AI and data.
AI and data, exactly.
So our mission today is to give you the shortcut. We're going to get past the press release headlines.
Right.
We want to know where the actual growth engine is, what kind of, technological infrastructure is powering this new vision, and maybe most importantly,
The risks.
the risks. What are the major financial and legal risks you need to understand now that they're operating at this completely unprecedented scale?
And it is an essential deep dive because this company is defining itself, and pretty successfully, as the world's #1 AI CRM.
You see that phrase everywhere now.
Everywhere.
Yeah.
And their ambition, the record results they just posted, their movements really do influence the entire tech landscape.
Okay, so let's start with the fundamentals. The numbers that show us what's coming.
The pipeline.
Exactly. The total remaining performance obligation, or RPO. That's the one that signals future contracted revenue.
And that signal is extremely strong. I mean, total RPO climbed 12% year over year,
12%.
hitting nearly $60 billion.
$59.5 billion to be precise.
Right. And the current part of that, the revenue they expect in the next 12 months, that's up 11%. So you're looking at, what, almost $30 billion there?
That pipeline just provides a rock-solid foundation for everything else.
It does. And while all the talk is about AI, the flashy new stuff, the core business model,
It's still that stable, recurring revenue.
precisely. Subscription and support, that's the core. It's about 95% of their total revenues.
Clocking in at $9.7 billion for the quarter.
Right. So total revenue hit over $10 billion, a 9% year-over-year rise. That stable foundation is what lets them make all these huge bets we're about to talk about.
Okay, let's unpack this AI revolution then. Because they aren't just adding AI features. They've rebranded their entire suite with Agentforce.
Agentforce Sales, Agentforce Service, it's everywhere.
It signals a complete pivot. But how do we get past the marketing? Where's the concrete, measurable data in these filings that proves this is actually scaling?
So this is what's fascinating. They are actually giving us computational numbers we just haven't seen before. Metrics that show real-world usage.
Okay.
The headline metric is token processing. So Agentforce has already processed more than 3.2 trillion tokens through their LLM gateway.
3.2 trillion.
Trillion. That number is just astronomical. It shows an immediate and immense uptake from their customers.
Okay, LLM gateway might sound a bit like jargon to some. Can you break down what that actually is strategically?
Yeah, that's a great question because the gateway is critical. It's not just a pass-through. Think of it as the central control layer for all the generative AI on the platform.
So it's managing everything.
It's managing security, cost control, and even model choice. It lets them govern which LLMs get used for which tasks, to make sure data is safe and costs don't spiral. It's the governance choke point for trillions of tokens.
So it's the security guard and the accountant all rolled into one, making sure this huge volume doesn't become a huge liability.
Exactly. But processing tokens is only one part of it. To do that, you have to be feeding the beast an insane amount of data.
Which brings us to Data 360. What did the filings say about the data layer that's supporting Agentforce?
This is where we see hypergrowth. Data 360 ingested 32 trillion records.
In Q3 alone.
In Q3 alone. That is a 119% year-over-year growth rate. This isn't just, it's not incremental growth, it's explosive.
But moving 32 trillion records around sounds incredibly inefficient and expensive.
It would be. And that's where the key technological driver comes in, zero copy.
Okay.
This quarter, 15 trillion of those records, so nearly half the total used zero copy. And that's up 341% year over year.
So what does zero copy actually do?
It's sort of the holy grail for data efficiency. Instead of making copies of data to analyze it, which is slow and costly,
Right.
the AI model just accesses the data right where it already lives. For the customer, this is huge. It lowers costs, gets rid of latency, and crucially, their sensitive data stays put. That solves a ton of security and compliance issues.
So zero copy is really the thing that lets them scale Agentforce without scaring off their biggest customers about data governance.
Absolutely. And it's not just structured data. We also saw almost 390% growth in processing unstructured data. All these points confirm the AI layer is fully operational and it's just consuming data at a crazy pace.
And they're positioning themselves as the foundation for the whole AI economy. I saw a stat that nearly 90% of Forbes' top 50 AI companies run on Salesforce.
That's right. And the best financial proof is in the revenue streams. The fastest growing subscription area was the Agentforce 360 platform, Slack and other category. That category grew 19%. And that's the foundation that enables all this AI and integration work. So the momentum is clearly there.
That kind of velocity, 32 trillion records, it just requires aggressive strategic moves.
It does.
So we have to look at how they're spending money externally with M&A and internally with restructuring. Let's start with the acquisitions.
They made two really big ones right around the end of the quarter.
The biggest one being Informatica.
Right. That deal was completed in November for about $9.6 billion, mostly cash.
Almost $10 billion. That's a massive price tag. Informatica is all about data management. Why is that deep-level governance so necessary for them right now?
Well, this is the strategic connection that I think a lot of people miss. Salesforce is now processing trillions of tokens and selling AI-generated output.
Okay.
But the big risk with generative AI is that the output could be wrong, or worse, biased, toxic, or even using copyrighted material. So Informatica is the protective layer. It brings data cataloging, quality, governance, privacy, all the things you need to ensure the data going in is trustworthy.
So without that, the whole AI promise falls apart.
It completely falls apart. Informatica is how they can promise trustworthy AI. And to fund that, they borrowed $6 billion.
So Informatica is the liability shield for Agentforce. That explains the valuation. What about the other one, Regrello?
Yes. In October, they bought Regrello Corp for about $818 million.
Also in cash.
Primarily cash. And Regrello is focused on AI-native business process automation. It's about applying AI directly to internal workflows. What's interesting is the goodwill recorded here was over $700 million.
A huge premium.
A huge premium. It suggests that tech and talent was strategically vital to them right now.
You know, it's fascinating and a little contradictory to see them borrowing billions for these huge acquisitions,
Right,
while also pushing for radical efficiency internally. How do those two things square? Does a few $100 million in cuts even matter next to a $10 billion acquisition?
That tension is really where you see the strategy. The filings confirm they are still committed to improving operating margins. They took restructuring charges of $260 million in Q3.
And that's mostly workforce and real estate reductions.
Exactly. The stated purpose is driving long-term sustainable growth. So while $260 million seems small next to $6 billion in debt, the internal cuts are about discipline.
So making the core business leaner and more profitable.
Precisely. The acquisitions are for growth and securing the AI future. The restructuring is about maximizing value from the customers they already have.
And those restructuring costs aren't just on paper, there's still cash going out the door.
They do. The filings estimate another $160 to $180 million in future cash payments are still expected for workforce costs. So it's an ongoing commitment.
And finally, on capital allocation, they're clearly rewarding shareholders at the same time.
Oh, absolutely. The board expanded the share buyback program by another $20 billion.
Bringing the total up to $50 billion.
$50 billion. They've already repurchased $8.7 billion this fiscal year and paid out over $1 billion in dividends. So they're juggling everything: growth, debt, and shareholder returns.
Okay, so this aggressive expansion into AI has to be viewed through the lens of risk. For anyone trying to understand this company, the legal headwinds are just as important as their revenue.
Absolutely.
Given the scale of Agentforce, what are the inherent risks they're explicitly highlighting around generative AI?
Well, the filings are now very specific about the risk created by their core product. Meaning they state the fundamental liability. The content the AI creates might be factually inaccurate, flawed, or contain copyrighted material.
Which is a huge problem.
It's an existential problem for their brand. It could expose them to massive financial liability and, maybe worse, huge reputational harm. If the #1 AI CRM can't guarantee its outputs are accurate,
the whole trust message collapses.
It collapses. And that leads directly to the regulatory burden, especially in global markets.
It seems like the EU is really leading the charge there.
They are. The landscape is getting so much more intense. We all know about GDPR and CCPA, but the newer EU acts are imposing massive operational costs.
Like what?
We're talking about the Digital Services Act, the AI Act, and especially DORA, the Digital Operational Resilience Act.
Why is DORA such a specific concern for a company like Salesforce?
DORA is crucial because it governs cloud services in regulated sectors like banking. It imposes incredibly strict rules on security, testing, and availability.
Right.
Combined with data transfer rules, it forces them to guarantee data sovereignty and resilience. If they can't prove their platform meets DORA's standards, they could get locked out of some of their highest value financial services customers in Europe.
That's a direct threat to their European revenue. Okay, moving to specific litigation, what's the latest on the Backpage lawsuits?
So the Backpage cases are still very complex, multi-jurisdictional actions in Texas and Illinois, all seeking damages related to their past CRM software provision.
Unspecified damages, which is always worrying.
Always. The key recent update is that in October, a stay of proceedings was granted in several of the federal actions.
A pause.
Right, a pause, pending the outcome of related criminal proceedings. So it buys them time, but the underlying liability claim is still very much an open question.
And finally, the Slack litigation. Any resolution there?
We saw mixed results. The federal action, Denny versus Slack, actually ended well for them on November 10th. The court entered a judgment for the defendants.
So a win.
A win. However, the consolidated state court action is still a live issue. The stay on that case was lifted on November 7th, so the plaintiff can now proceed with discovery. One door closed, another one reopened. So that headache is still active.
This deep dive has really shown a company that's, well, it's operating at two speeds at once.
That's a good way to put it.
On one hand, you have this massive, measurable pivot to AI. You can see it in the trillions of tokens, the hypergrowth of Data 360, all of it built on this new Agentforce platform.
And on the other hand, you see the tough strategic decisions needed to make that happen. They're balancing these huge external investments like the nearly $10 billion Informatica deal to get data governance right.
Right.
With these disciplined internal efficiency drives to boost those long-term margins.
It's also interesting to see where the growth is coming from globally. If you adjust for currency, Asia Pacific is leading the charge at 11% growth.
Yeah, compared to 8% in the Americas and just 7% in Europe. That APAC momentum is a really critical piece of their expansion story.
It is.
And, if we connect all these dots, the entire story really comes down to speed versus safety. They've accelerated AI adoption at an exponential rate, and they've tried to build the guardrails by buying Informatica.
Which brings us to a final thought.
Exactly. A final question for you to think about. Given this accelerated adoption of Agentforce and the complexity of integrating everything they just bought, how might the escalating legal and ethical risks of AI content, that risk of inaccuracy and copyright infringement, how might that challenge their promise of trust and potentially hit their sales pipeline in those heavily regulated regions over the next year?
That tension between pioneering speed and ultimate responsibility, that really is the defining challenge for enterprise tech right now. A fascinating dynamic to monitor.
It certainly is.
Thank you for joining us for this deep dive.
Always a pleasure.
We'll catch you on the next one.